Hi, Lance Roberts here with the realinvestmentadvice.com technically speaking market update for May 31st, 2018. Over the last couple of months, we've been talking about this consolidation process that really kind of continues in the market. And what we mean by that is simply that there is a continuation of tightening between these rising bottoms of the market and the declining peaks where this market has continued to run into resistance and fail. One of the things we talked about over the last couple of weeks in particular was as the market broke back above this 100-day moving average, it pushed the markets back into a very tight pattern. Now, on Tuesday, the markets broke down and broke this support, and there was immediate concern about whether or not that process had been broken. As we talked about then, we said that one-day action in the market doesn't really matter too much because since we work with weekly data as we're longer-term investors, what's important here is how the market's in the week. Of course, yesterday the markets immediately rebounded higher, got back above this 100-day moving average, but continues to remain tied to this very tight consolidation process. This is why we focus on weekly data rather than daily market moves. Volatility can lead to bad investment decisions over time. Let's zoom out here and let's take a look at the markets from a weekly base. This is why, and this is where you're actually going to see the real change show up in terms of how we manage money. When you take a look at a weekly chart, all of a sudden the dynamics of the market really change to a great degree. As you can see, there's a very clearly defined topping process that is continuing currently in the market as prices are becoming more compressed between this rising level of bottoms and this declining row of tops. Watching this process is very important. This is a binary outcome. Markets are either going to break higher and move up, or they're going to break down and move lower to levels of support. It is unlikely the market will continue this process of tightening over the course of a longer period of time. This is going to come to a conclusion probably sooner, much rather than later. Watch things in the markets like what's happening with Italy, what's happening in global economics, as well as what's happening domestically. We are seeing weaker patterns of economic growth. We are seeing concerns about rising interest rates, the impact to mortgage debt, the housing market, rising delinquencies and loans, and of course rising defaults and credit card rates. These are all things that suggest weaker economic outlooks. Combine that with rising rates and higher oil prices, and you have a further tapping on the consumer. Of course, in terms of the economy, consumption makes up about 70% of that. So keep a watch on this very importantly here as we are, and we're going to be making decisions. Again, we're carrying higher levels of cash currently simply because of this process. We've been doing this for the last couple of months. We'll put that cash to work if the market does make a move higher. If not, well, that cash will act as a bit of cushion while we begin to put on hedges and reduce risk if the market does begin to break down. This process is going to end soon, so pay attention to this very closely because that's going to make a big decision into where the markets move next. That's your Technically Speaking update for today. RealInvestmentAdvice.com. I'm your host, Lance Roberts.